Hello, welcome to Property Point, our first episode for 2018. Hope you had a great break, and I'm here with Nerida Conisbee from REA Group to talk about property again.
Thanks for having me.
Hi Nerida. Nerida, we're into 2018 and just really wanted to talk about the outlook for this year, what the expectations are given what we have seen over 2017.
Yeah, look, 2017 was, by the end of the year, we did see a pretty marked slowdown. By the last auction day of the year, we saw a bit of a kick up. So, it was a little bit more positive, but certainly very different towards compared to 2016. So 2018, we are going into a far slower market and, in many ways a far better market. The fact that price growth has really slowed, I think, is a positive for most people.
Yeah, and do you see that continuing through the year?
Look, it does depend on a lot of things. I mean, on one side, interest rates are on their way up. We know that the Reserve Bank probably aren't going to move anytime soon, but US rates are very quickly increasing, and that will be partly passed on to mortgage holders. So that will really slow the market. On the other side, though, we do have jobs growth, and we're finally seeing pretty strong jobs growth. Hopefully that flows through to wages growth, and that will put an increasing pressure on demand. So we kind of have these two factors that are influencing the market at the moment.
Yeah, we're in this interesting economic position where inflation is very low, interest rates possibly on the rise, although not in the early part of this year. But if inflation does start to creep up and then rates start to creep up, that's going to put a lot of pressure on households, or many households.
Yeah, and I think the Reserve Bank will move very carefully. I mean, at the moment, retail trade is very, very low, and it is actually at the lowest level we've seen since the GFC. So wages are low, unemployment's going down, so you're right, there's these sort of contrasting figures, but the Reserve Bank will have to move carefully. Households are very indebted at the moment. Banks are going to have to move very carefully because, they can't start increasing rates so quickly that people start defaulting, and I think that's the big risk, that we do have people so indebted. We've got a lot of property investors that are very indebted that the Reserve Bank will have to move carefully, as will the banks.
The other interesting thing that's happening mid-year is this home downsizing measure, which the government announced in the last budget, where people will be able to, retired people 65 plus will be able to sell their home, put some of that money into super. So that could create some dynamics in the market from the mid-year?
Yeah, look, I think it's good news. I mean, it won't have a massive impact. I mean, we do know that using some of those taxation measures do have varying levels of impact. I mean, first home buyer grants are very good in terms of creating first home buyer activity. I think these downsizing measures are good news. I mean, you've got a lot of older people living in very large family homes. There's absolutely no incentive for them to downsize at the moment because there's tax problems, there's superannuation problems if they do. So, I think this is a good measure to try and get older people out of those big homes and into smaller ones that might be easier for them to look after.
Just having a look around the markets then, is it still a Sydney-Melbourne story for the property market?
Oh, look, Sydney is definitely on the slowdown. I mean, at this stage, we can see on site that demand really has backed off. I think the problem for Sydney, it just got too expensive. And, if you have a look at any suburb within Sydney, once it reaches a certain price point, we do see buyers back off. I think I've mentioned before, but Manly was such a key one that last year it did hit that $3 million median. Manly's popularity on our site dropped dramatically once it hit that price point. So I think overall the market in Sydney got too expensive. This year, we do expect pretty flat conditions in Sydney. I think Melbourne might be a little bit stronger, but certainly won't be galloping away at 10-12% price increases. So a very different situation in Melbourne and Sydney this year compared to last year.
If you're a property investor, what would you be looking at this year? Where would you be investing? What would you be buying into?
Yeah, look, I think it depends what you're after. I mean, I think most people buy property for capital growth, and if you are buying for capital growth, I think Hobart's still worth a look. We continue to see very strong demand in Hobart. That economy is really changing now. We're seeing it move from a government-run economy to more tourism and restaurants and cafes and hospitality, and I think and education even is a big one there as well. So that's really changing. I think that's worth a look. Adelaide, we're starting to see Adelaide increase in popularity. So I do know that there were a lot of property investors that bought in Adelaide last year. We didn't see particularly strong conditions on our site in Adelaide last year, but this year we are starting to see some suburbs increase quite rapidly in popularity. And I think if you're someone that likes to buy bottom of the cycle, I think places like Perth are probably worth a look at. That Perth at the moment is still seeing declining prices, but there's some suburbs that are doing quite well. So particularly those inner west suburbs, Northern Beaches suburbs are really starting to see price increases and very, very strong demand on our site.
On your site itself, have the slowing of conditions reduced the amount of traffic, or is that still up on the...
Yeah, look, it's been interesting because the number of buyers has backed off a bit, but we've also seen an increase in listings. So, you know, we thought that would happen. In a very, very strong market, we don't see great listing conditions. That people seem to be a little bit fearful about selling their homes when the market's running red hot, you know. And I guess because most people typically sell and buy again. So, you know, they don't like to leave a long time period between doing that when the market's moving quickly. So the slowing conditions have been great for listings. For traffic, you know, we are seeing apartment buyers in Sydney back off. Melbourne, all other markets are, you know, quite variable, but, you know, it's not like conditions are really backing off quickly. You know, it's not the signs certainly of a crash, but it is strong signs of slowing, and, you know, I think that's good for most people.
Well, I'm sure it's going to be a very interesting year in the property market, Nerida.
It certainly will.
Thanks for joining us again.
Thanks for having me.
And we'll get back to you with our next instalment of Property Point next month, but we'll keep you up to date with the property market as we go forward.